All right, good morning, everybody. How's everybody doing on this fantastic Sunday morning? So, Mr. West has asked me to do or discuss why I use limit orders and market orders. And also, I'm going to go over entries as I was asked to go over entries. And hopefully, he is here. Good morning, everybody. All right, so first, let's talk about when and why to use a limit order versus an actual just market order. So I'm going to go over here to the Euro Aussie chart and we're going to discuss. This was one of the last few trades that was taken last week. We were watching Euro Aussie, and the main reason that I was looking for short side sets on this asset is simply it had a nice breakout, right, on the daily charts. If you go look at the daily charts, you can see it did have a fantastic breakout. This push right here was when, no, it was over here, right? Yeah, so we were looking for shorts on the hourly because this, like, three drive topping formation, so to speak. Whenever you have a breakout and then you test for support and then you get another impulse leg to the upside, they generally will be a lot bigger than this. You can see how this thing was just basically trading sideways for 3 days. It did make a new support. I mean, it did take out this resistance level here. So if we just bring this line up, this would have been, you know what, let's delete it so I can get one over here that I can move around better. This would have been hourly resistance, this level, right? And then you did get a break here, this push up. But you can notice that when you finally did get that breach above resistance, you didn't just start making higher highs and higher lows. You essentially just traded sideways and went back in for a support test. This would have been your support, as that was your lowest bearish close. So in this range of price, we're watching to see if you're going to get a breakout, come back in and retest, hold this area of support and go higher. You didn't get that. You came back in for a support test, and then you stayed beneath this last bullish candle. So this looks more bearish than bullish. Here is your breach right there. That takes out your hourly support level on the downside. So this is essentially a bear trap. Then you had this push higher, taking out all the stops above this wick. So once that happened, we then immediately came back into this range of price, took out that new support zone. So we were looking for shorts, looking at this as a possible trap. If this was going to continue with bullishness, we would want to see price go up, come back in and check this last bearish candle, and at least stay closing above the close, right? We do not want to see a close below. We got the close below. So whereas everybody was looking for longs on this because it was keeping in line with the trend, we were essentially picking a top, looking for a pullback only. Okay? So here was the support zone that was most important. We'll get rid of this line right here. So I do have the paper trading app pulled up so I can just basically show you something. Once you got this close right here, right at the line, you went up. Instead of continuing higher, you found resistance, and then boom, you came in for a lower close. This bullish candle's opening price, if you look at it, it just traded up into that old resist or old support level and treated it as resistance. All right. Now I'm still not looking for a short right here, as this bullish candle's at 5 a.m. This is the candle right here that prompted my entry. This candle closed lower than this candle's close on an hourly closing basis. You can see that right there. This close told me that, yep, we just made another lower close. The chances of this thing going up from here are probably less probable. You know what I mean? Because you just got to close below support. This would have to, in a sense, be a a bear trap if it does go higher. But since we just had this bear trap over here the day prior, and then this bull trap over here, we were looking for bearish continuation. So on this hourly candle right here, your entry would have been the open or the close of this bullish candle. So you would take your line, get your price right there, one spot, 60987. You would be looking to sell that. There's your limit order. Let's go with a 1%. 1%. Check the stop loss. Here is the candle. We know this wick traded up. So if that's going to be our entry, you use shift. Hang on, let me get rid of the magnet tool. You use shift and left click right on the line. Get your pips. Right there, you can see that that wick high would have been 6.4 pips above this. So you want your stop to be at least, I would just go ahead and say 10 pips right there. So that would be your stop. Now this is going to automatically calculate your position size based on 1% of your total account's equity being determined by the size of the stop loss. Click on limit order and you would put a limit order right there at that price. So what's the difference between using a limit order or a market order? You can use a limit order if you're looking at other things and you can't watch this chart. You do know that you want to take a short entry there, but you cannot watch this chart. So in that case, use a limit order 60987, which your stop is already clicked. You're ready to go. Here comes your entry. Now it's going to show over here because price is over here. Now, I wouldn't leave that entry like that because, well, now the spread is 20 pips wide, but you essentially want to bring this limit order down a couple pips from the line because of the spread. So remember, this is the candle we're watching. So if we hit the bar replay to here, so our limit order is sitting right there. This was the break, so we're looking for price to come up and test that. Okay, so that's where your limit order would be. Here's a 15-minute chart. Upon this wick push, you get triggered into the position, right? There's your position, and your stop loss will automatically be wherever you put it over there. I don't see it anymore, but that's how you enter the position with a limit order. Going back to the hourly, you don't even have to look on a smaller time frame chart, right? You don't need to look at a 5-minute chart for entries with this strategy, as long as you know what you're looking for, where you're looking to be on the entry. Now this is at 7 o'clock in the morning, Eastern Standard Time. What happened to the next hourly? There is your entry. That is your retest. Your push back up to test that bullish candle's close to see if that close wants to hold as resistance. Obviously it did. We know this in hindsight because we took this entry. This was the entry on this asset. All right, what are we targeting? Well, this would have been a possible area of support, but you can see you got an hourly close below that. So the next area to be looking for support, or your target, if your target, your stop is up there and you put your pit or your position calculator up here like this, there would be your stop. This would be your target. The reason this is your target is because you know that that is a Heath level, aka a demand zone. So there is a possible, or there is high probable chance that when price gets down to there, it will maybe find resistance or support. I'm dropping a lot of frames and I apologize about that. So that's why we take targets specifically where we take them. That's a 5-to-1, almost a 5-to-1 trade. Here is your next candle. Boom. There you go. So your target would have been entered. You would have been out of the position by 2/3, and then you would have moved your stop to break even, and then let the last 1/3 position remainder run as far as it wants to run. Or if it does find support down here and come back and stop you out, then you're good to go. Now, that's when you would use a limit order. If you are watching price right here, you know that when this hourly starts pushing up into that level, once it gets to that level, you can simply just mark it in. Market orders are my preferred way because I have the ability to stare at the charts. Some people that have jobs do not. A limit order and a market order are no different, other than a limit order puts you in around that specific price point, whereas a market order is going to put you in right now wherever price is minus the spread. So with a limit order, if you put a limit sell out there and you're not far enough away from the spread, and if the wick goes up into your limit order and still doesn't trigger you, you're going to miss the trade. And it's simply because your entry wasn't far enough into the spread, so that way price can trigger, so that way the broker can trigger the order. It is all done automatically. So sometimes the spread does get wider and shrinks on occasion. So just put it, if you're going to use limit orders, just put it a couple pips away from the actual spot you want to enter. If you're using a market order, like I said, boom, it puts you in at the nearest bid or the nearest ask minus the spread. So you would immediately be like, if you would have caught the exact high on this wick and hit sell, you would have been automatically put in a little bit below that price. That's where you would have been entered. That's where your order would be sitting, and your stop loss would still be above that. And then when I get close to down here where my targets are, I will put a limit buy order, right? A limit buy order with 1/3 of the position. Now, there isn't a calculator on this order pane that tells you how to get the 1/3 position on there, but just use your head. If you're in with 7 lots, what's 2/3 of 7 lots? It would roughly be about 4.5 lots, right? So let's just go with 4. 4 million is 4 lots, and that would be your limit buy. You would put your limit buy at the price at which you want to put your target, and that would have been here. So that price is 16093, 16093, I think. No, it's not. 160693. And then also I do the same thing with this. Now, it's important that you understand that when you do that, guys, I don't know why it's not showing up over here, but when you do that, when this comes down and triggers that limit, I also grab the limit order and I bring it up just a little bit off the main level for the spread, just in case if it does go down there at that level and that level holds a support, you want to get out of the position with 2/3. That way your trade is profitable no matter if price comes all the way back up and stops you out or not. You had a profitable trade, and that is the goal. Small, consistent wins. You have to readjust your stop loss, all right? Because your stop loss, sometimes it will automatically do it depending on which broker you're using. So like if once this pushed down and took me out of the trade 2/3, that automatically calculates my stop loss to be 3 pips or 3 units or 3 whatever, 3 lots. And if you close the trade manually, that limit will stay there. It's important for you to make sure you close all of your positions. All right. And it's up to you. That's your responsibility as a trader. If you're going to use brackets like that, you don't have to use brackets. You can absolutely mark it out of the whole position. But in my experience, it's best to just do 2/3. You don't have to put a limit down there either. Another way you can do it if you're watching price is you can simply mark it out with a buy market. Put in the corresponding amount of units that you're trading with to be close to 2/3 of the position size and hit enter. This way, there will be no leftover limit order in the market. Market orders are safe. I use them most of the time. The only time I use limit orders are if I'm watching something else or for targets. Play around with this on a paper trading account first, so that way you can understand how it works, how the market orders and limit orders work. But as far as what's the difference, there isn't any difference at all. It's the same thing. And a stop order is only used for breakout trades. You won't put a limit order for a price that price hasn't been to yet, right? For instance, if this is the level that you want to enter on a stop order, it has to be below price. You can't put a stop limit or a stop sell up here. It has to be below price. That's what a stop order's for. It's for taking breakout trades. For instance, if you wanted to get in after this wick gets penetrated, you would put your stop sell there. And then when price goes through it, it'll take you out. A stop limit they're retarded. I don't think they're useful at all. I never use them. I use market orders mostly, and then limit orders. I don't know. There's no other difference. But moving on, that was the entry for that trade. So let's get over here, exit this so I can close all these orders real fast, and then we'll go talk about the other trade, the USD Canadian dollar trade. And it was basically the same thing on it as well. I just marketed in because I was watching this one very, very closely. So over here is where we were. Let's get rid of this so as to not confuse anybody. So this is where we were in price. And on the live stream, we were watching this resistance level because this bullish Heath level came in and closed below it. Then you had a bearish reaction, completely taking out this. So we were watching for this first. Any closure above that line, one spot 27747, means you are scrapping the trade. If you look, you pushed way above that Heath level, but you did not close. In fact, you closed bearish, right? So I was watching this on a 5-minute chart. So I watched this transpire on a 5-minute chart. So this was where it was. This is that hourly Heath level, right? Look how close it is to a 5-minute Heath level. This is another thing when I talk about finding entries on a smaller time frame. You want that smaller time frame Heath level or whatever you're looking at to take an entry, be very close to corresponding with an hourly or an 8-hour or a daily level. All right, I don't just pick out random 5-minute candles and assume that that is going to be a Heath level. See this bullish candle right here? See how close it is to that hourly Heath level? So there you go. There's your entry. Right there. Or close enough. I took the magnet tool off for a second. So this is price testing that. You did get a 5-minute closure above. Boom. Right there. Traded into 5-minute resistance perfectly. If you bring this line over here, you would be doing that. See that? Beautiful test. Perfect. Absolutely perfect. Now this invalidates the trade on a 5-minute basis because not only did you get a close into your Heath level, you also closed above it. That invalidates your trade. You're not looking for shorts. However, this is a bull trap, right? This is making people assume that it's going to continue to be bullish. There is another push, and then this candle comes in here. This doesn't tell me that I need to enter yet. This one, I'm starting to look for entries, right? Starting to look for entries. I want to get in on a retest of this bullish candle right there. That's good enough for my entry because if you check your pippage, you're about 16 pips. So I want to do 15 pips as the most that I want to look for because then you need 30 pips just to be a 2-to-1. However, you don't know if you're ever going to get that. Here we did. This is what we got right here. Notice how this 5-minute candle pushed all the way up into this bullish candle, this little doji. It's not a Heath level. I mean, it is technically because it closed green, but it just came up and tested the wick of that. That's an entry. That is a valid entry right there. And also, if you get in on this push up, notice how much better your stop is. Now it's only 11 pips. Market sell right there. Entry will put you a couple pips below the high. Stop is set right there. And then the next thing that happens is fantasticness. There goes price. When price starts to leave your entry quick, that is a very good indicator that you are absolutely on the right side of the trade. So this candle was pushing well above the hourly Heath level. So just a touch of that level and a hold would have been good enough for an entry as long as your stop loss was close or far enough away from that. But you wait on closures because this can close up here and that would definitely invalidate the trade. Watch what time it is. These candles will give you the exact amount of time that each candle closes. So like if you're getting close and you're trading up here, and say you got 15 minutes left on this hourly candle, that means that you can watch it closely now, because you're probably going to start to see this thing move in the real direction. For the first 45 minutes of an hourly candle, it's just bonkers. It's just playing with you. It's churning emotions is what it's doing. But the last few minutes of the hourly candle, this is what you got. Boom. Right? So we got short on this push lower, and stop was above that 5-minute high. And then we just let it play out. And this is what happens. This lets you know you're in a successful trade. 1 hour later, if price is back up into my entry, I'm exiting that position. We took a trade on Aussie USD this Friday. We entered it and we exited it because first it looked great. The trade was working in our direction, and an hour later, price was right back up into our entry. That's an exit signal. Just take the trade off. Don't wait. Don't convince yourself that it's going to work out in your favor, because if you're right in the right side of the market, price is going to leave once you get that golden entry, and it's going to go in your direction pretty rapidly. And you're going to feel a lot better about the trade. If it's still meandering about around your entry, there's a good chance that you're on the wrong side of the trade. But this trade ended up being flawlessly and beautiful. From this entry down to this last support level was exactly 30 pips. So it was a 2-to-1 risk to reward. Took 2/3 of the position off. We might start to break even. Now we got plenty of continuation. And this thing ended up continuing down pretty good for the next couple days. And there we go. Right there. So this move lower right here paid me more, with just 1/3 of the position from here to here was more than the initial trade that I took off. And that's the whole reason of taking 1/3 and 2/3 or 2/3 of the position off. But entries, you're looking for entries from 7 to 10 in the morning. That is it. New York Open. That's it. No more, no less. You're looking for one entry on one asset per day. All right? This way you can focus on the one trade. If you're taking multiple trades during the New York Open, you're doing it wrong. Unless you're going, if all three assets are going to do good, then yay. You know what I mean? You can do it, but it takes a seasoned vet, in my experience, to manage multiple positions at once. So that's entries. We're looking for entries from 7 in the morning till 10 in the morning. If you do not find a trade, you wait until the next day. That's on you as a trader. You have to be able to control your own emotions and all that stuff. But as far as market orders, limit orders, it does not matter. It's your choice. I use market orders mostly because why not, right? I'm sitting in front of the computer. I can watch it. Let's go look at the Aussie USD trade. All right, so here we are. Let's drop down into, was it in here? If you're new to TradingView and you don't know a lot of the hotkeys, Alt-V will do a vertical line like this. Alt-V, it'll put a vertical line on your chart, and an Alt-H will do a horizontal line. Alt-V vertical, Alt-H horizontal. That's just a little hotkey trick if you're new to the platform. Also, if you don't know how to take pictures, this camera icon right here, if you push that, it'll pop up this image URL window or this box. Hit copy. When it says copied to clipboard, you can then go over to Discord or your favorite chat room, whichever chat room you're part of, and hit Control-V in the typing part of that chat room, and it will automatically post the link to this chart and pop up as a picture of the chart if you're new. I'm only saying that because I've gotten a few questions about that here recently. So we're looking for close to that time in the morning. Where was the trade? Am I even right? Was it Aussie? Yes. Yes, this was it. This was it right here. What were we watching though? I can't remember what we were watching. Maybe it was an hourly level we were watching. Yes, probably that heat level right there. So let's go back into the 5-minute chart. So this was close to when we entered. Right here was our entry. What we were watching was we was watching that hourly heat level right there. However, there's the heat level there, right there. And you could have even looked at that one. That one would have gave you an excellent, perfect entry. This one. See how price traded up into it twice and then left. So on a test of that again, entry, looking for short side sets. Boom, looked like for us right off the rip. This looks good. Also, we took out this 5-minute market structure because remember guys, this strategy works. Support and resistance is the open and close of the candles. Time frame is irrelevant. This is your last 5-minute, lowest 5-minute close once you trade it away. So on the event that price comes back into that level, it maybe will act as support. So there's a close below. So that looks really good for us, right? Not only did price leave as soon as we got entered into the position, stops above that, price left in a hurry. So I'm thinking to myself at this point in time, perfect. Another beautiful trade. Starting to work out pretty easily now, right? But nope, here we go. Look at this. Once this happened up here, once we took out this bullish candle, I started to tell the guys in the chat, look, man, I'm not liking this anymore. There's a first test of resistance. Let's get the magnet tool back up. There we go. That's going to be resistance. There's your first attempt to get over, second attempt to get over, nonchalant. Price at this point, I'm looking for it to make a bearish close. Very next candle, boom. This is when I said I'm out. I'm exiting the position. We entered the position at like 7 a.m. Here we are at 8 a.m. and price is right back at our entry. Not looking good, right? Not looking good. So we exited the position. Now, if you come up here and look at price, 8:30 to 9 o'clock, this was a fantastic entry. And had you taken that position, you made money. So we were early. We were early. I don't like taking positions after 9 o'clock. So I did on the USD CAD, but I'm not looking to get in a habit of doing that because I'm going to be honest with you. Most of the trades are going to work out from 6:30 to 8. That's when most of your trades are going to be the most successful. 6:30 to 8. If you're not in a position by 8:30, chances are you're probably not going to get one. What you can do when this happens is hit that old Alt 8 button. If you're just trying to find yourself inside of price, look at that. Over here, you got a perfect hourly resistance right there. So this wasn't a perfect test of it, but there we go. Now we're on it perfectly. We can shrink back down into the 5-minute time frame and look how price reacted at this perfect Heath or hourly resistance. That's not a Heath level, that's just an hourly resistance. There it is. Boom, boom, boom. So on this push lower right there, well, to be honest with you, you never got an entry even if, right? Never got an entry even if. You would have had to just enter there and hoped for the best. That's basically all you could have done. Because once this took out this structure and this structure, you never got a retest back up into this midpoint to get short, looking for continuation. So you wouldn't have probably made that trade either. And it did take out low of day. Down here is low of day. That would have been your target, right? That would have been your target. And boom, low of day breached, target taken off. And then for the rest of the day, what did it do? It traded sideways. This is why you're not looking for entries after 10 o'clock, because generally you're going to be already heading in the direction the trade's going to go anyways. And then for the rest of the day, you just chop around sideways, stopping everybody out every which way. People that got short here got stopped out, right? Then people got short down here again, got stopped out. It's just, It's useless trying to trade that stuff. But that's what you're looking for on entries. Daily levels are good. Absolutely. I was playing with the bar replay today, this morning, and was absolutely killing it. Watching the bar replay daily. From now on, I want you guys to practice the bar replay on daily levels. You need to understand the daily time frame in order to understand what you're looking for as an intraday trader. All right? Need to understand that. Have to. Let me see if I can find what I was looking at. Because each day you get a new daily candle. So each day provides a possible opportunity on that day to make a scalp. Right? Make a scalp trade. I'm pretty sure it was in this area, so I'm just gonna yeah, this is it. This stuff right here. This was fantastic. Anything above, looking for bullishness. This was put in a low, kind of like a double bottom, and was trading away, found resistance over here, and then basically chopped sideways back and forth, up, in, around, and through that 50 RSI. So if you watch your 50s, this 50 spot on the RSI, you'll know you're looking for entries when you get close to that on the daily time frame. So this is a bullish trap. Right here, you're taking out resistance to the upside on a daily close, and then your very next day is a trap. You take out the low, you took out the high, you closed down next to the lows. Looking for shorts, targets here. Oh, not that. Probably didn't get it. There it was. Boom, target achieved, right? Now, you're below the 50. You know you're looking for price to come up and retest old areas of possible support. Choose the midpoint of that candle. Watch that first. Let's just draw a line there. No retest. So basically price put in its own little bit of a stutter step here. What is price reaching for? If you see this, what do you think price is reaching for? Let's go down to this target here. This is going to be your target, but you need to get entry. You need to gain entry. So a retest of this bullish candle, possible entry. Here you go. Beautiful. That's a test. You're not looking to enter on that. You can enter there if you want. You can do it dailies. Boom, there's your target. Hit. Just start to understand how price works, and using daily candles will give you that ability to say, hey, if I'm looking for a trade inside of this day, it didn't work out this day, but it was an inside day, we know we're looking for shorts. So on that, you go intraday chart if this candle's being formed, and you find your open, high, low, close of this candle, and then watch price what it does when you get around those levels. Then you look inside on the hourly, 4-hour levels, start to watch price. Price tells you, is it breaking resistance levels to the upside, or is it chopping sideways with a range? Oh, I just beat up the microphone. With a range inbound. These are things that are going to help you make better decisions on looking for intraday range expansions. If you don't know what you're looking for, you're basically just going to call every up close candle a Heath level, and that's not it. What was that you asked me to look at, Alex? GJ. So on GJ, let's just get a little bit of gauge of momentum. Where is it? Which way is it going? Beautiful. So you got a cross on your 20 and the 50. You tested below the 100, got to close above it. So you're testing this stuff here. Looks like price maybe going to roll back over again. This is a pretty good bit of strength coming off of this low. You took out this target to the downside. So price can literally go anywhere from this point once you take out those targets. There was that target, pushed right into it, took it out. Did you take out this swing low also? Yes, you did. Flawless entry. Or not flawless entry, but flawless price action. Goes down, then comes up for a bounce. Here would have been the first spot that traders retail would have been looking to short. We're not. Why aren't we? All right, that's simple. See where this candle is in reference to this area of support. Where would have your RSI been? It's simple to find out. Just go back to the bar replay and do this. Here's your bounce. You know you're possibly looking for a short side set there. There's that big bullish candle. There's your close. Where are you at? Nowhere near that 50. You're definitely not looking for a short there. Not looking for one there. You're probably going to see where if it wants to go up into this ETH level right there. Then you can watch price. Also, there's going to be 8-hour levels in there as well that may or may not find resistance. Here's the ETH level on the 8-hour. Now, this is right next to price, so I can't play it out, right? This is where price ending up. And there we are, testing that. This session right here, the New York session, you just basically came down in for a test of this bullish candle's wick. That's where it found support. Price started to trade back up. Now, this did close red. So it's still testing real close to that level on the 8-hour. You see that you're getting closer and closer to that 50 spot. This may be getting ready to turn around and break out to the upside. We're not looking to take a short here unless we see epic failures on 4-hour or better. 8-hour, like a push up and a massive rejection. Then possibly the next session or the next day, we can look for a retest of this open or this close. Look to get short at one of those two areas, targeting next area of support, this level down here. But the way this RSI is moving, it's got quite a bit of momentum. Your momentum is slowing down. Instead of it being straight up, it's starting to angle off. So you could get a test and then a rollover like that. So, but it's getting close to the point to where we want to start looking for shorts. But like I said, it's coming in hot. It's coming in hot. So 3 days to get down there, 3 days to get back up there. So you may be getting ready to see a break of this. If not, we will be shorting it. But you're in chat, so you'll know if I'm looking at it to short it or not. I'll let you know. Thanks, no problem, man. Take your time. Yep. Thanks, Wes. I hope I cleared that up with the market orders and limit orders. It really doesn't matter. Yo, what's up? What's up, Will? Can you go more in detail what to look for with entries on lower time frames? I was the one that asked last night, Heath, by the way. Thanks. Yeah, absolutely. So, all right, let me go. How can I do this? Because that was that. It's raining. So lower time frame entries. How can we do this? Let's bar replay this. We already know what's going on for the next few days, but that's okay because I'm just trying to show you entries. So here's going to be hourly support, taking out that level there. Let's go into a smaller time frame on this push lower. That's taking that out. All right, so back to your daily, or let's do 4 hours. 4-hour levels. Support. That's a break of support. So price is going to try to come back up in for a retest of this bullish candle. Whether that holds or not, that's to be determined. Here's your check. Perfect test of the Heath level. So on a small time frame, let me go back to the 4-hour and outline this. So if we're watching this for entries, or we know at least that that's the 4-hour open, on a 5-minute time frame, it's going to look something like this. All right? There's our 4-hour level. You see how price traded to it, put in a little stutter step there, and then traded away from it. So this is actually the first time that price has even been up and around that level since it was put in. Here's your perfect test of it. So how does that look on a 5-minute time frame with a Heath level on that 4-hour level? Look right there. It's absolute flawless. Beautiful Heath level. This candle here. Timing is everything. 325, 325, 4, 450, 415, blah, 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 blah. 440 in the morning. Boom. There's your check. There's your reaction. So when you're looking for entries on the day near the New York Open, you want to know where your higher time frame levels are. Then you want to get a small time frame level close to it as possible and watch that. See, even on an hourly, if we go in, see how this hourly candle is also support. This is your last bearish hourly close. That is also support. So when you have an hourly support level and a 4-hour Heath level that are exactly the same price point, that's what's called confluence. That means that multiple time frames are indeed calling that level support and resistance because they are closing and or opening there. Does that make sense? So that is a very good level to watch. And look what happened. You got a check of that level. Just a simple touch. On the 5-minute, it's an exact touch. Boom. That's your entry. Right? You're looking to enter close to that level as possible with a tight stop. 10 pips is best. Just 10 pips. Which I don't know how much this is moving. So let's see where 10 pips would be. Oh yeah, 10 pips would be way up there. So in a situation like that, I may just use a 5 pip stop. So your entry is going to have to be 2 pips lower than that. So your entry would have been right about there. We'll Alt H us an entry level. That's your entry. Stop gets counted from your entry. 10 pips. Alt H. That's your entry. And you're looking for a low of day target. There's your target. So how big of a risk to reward does that give you? Short position. There's your entry. Right there. Stop loss. Right here. Target. Low of day. Or right above it. So here's your low of day. This candle. That also is a 5-minute bullish Heath level. This candle. So you can see that when you traded away from it, price did come back in and retest that, confirming that level as a Heath level. So you want to put your take profit above this red candle. So let's just say the whole candle, the wick too. So that would be entry or stop, take profit above that. And then does that correlate pretty decently with a nice trade? Let's go see. It's a 2.72 to 1. So it's better than a 2 to 1, almost a 3 to 1 trade. Did it work out? I have no clue. Taking entries this early in the morning means you're basically taking an entry from the London Open. I like to take my entries at the New York Open. Oh man, see, like that would have been killer because it was close to your take profit but didn't quite get there, and you see how price is turning around. I wouldn't have liked this. And it's also roughly about an hour from entry. 4:30 was the entry. 6 o'clock you're in, 5:30 you're close to the entry. So yeah. And then here we are, 6:40. Now this is the time that I'm starting to look for trades, and I see this, right? Same level there. So that trade wouldn't have worked out if you wouldn't have taken any profits down here. If you would have just set a static take profit down here and not just managed it on the way down. It's okay to manage them on the way down. I'll tell you what, like if I'm at 2 to 1 or better, I will start to shed risk. I don't have no problem with shedding risk at a 2 to 1. You're so extended to the downside on the larger time frames. I don't know if I would have been looking for a short down here anyways because of that. But that's what I'm looking for as far as entries go. I'm trying to get those 5-minute Heath levels as close to hourly, 4-hour, 8-hour daily levels as possible, as that is going to be your entry. Let's just play this out, because this is when price started to get real bad choppy. Yeah, so the trade was a long but there's no way to know that looking at this stuff. You can watch a midpoint range. Let's do it like that. Let me just say it like that. So watch your midpoint range of the trade you're trying to achieve, right? This was your entry. You're trying to achieve low of day. You did not get it. On this close above the 50 spot, take profits. Move, stop, right? Because if you're closing above that, you're probably going up. You're probably on the wrong side of the trade. That's very early. You're like in between the New York Open and the London Open. That's not really a fabulous time to take a position. 3 o'clock, from like 2:30 in the morning until 3 in the morning, or 4 at the latest, would be where I would be looking for those London entries. And that puts you pretty close to around the same as the New York Open. You're looking for entries around an hour before and an hour or two after the Open. Do the same thing on the London Opens. An hour before to an hour and a half after. If you're not in a position at that point, you're waiting until the New York Open. But it's been really choppy, love late. This thing has been very difficult to trade. Very difficult. This was that news. Wes even said, I'm thinking about taking a long here because of that. And I was like, man, I wouldn't, because of what time it is. Also, you're coming in hot. That's a lot of bearish pressure. It was a beautiful entry. That would have clocked in roughly 50 pips to the upside. 62 pip trade. You would have only been aiming at high of day, which would have been there. So, yeah. Apologies, Wes. There's no way I could have ever seen that happening. But on the close, look where it closed. It closed back above this hourly support. See why waiting on closures is so vital? There was your hourly support level. So even if you were watching that, you never did get a close below that. Not even on this deep push into that hourly Heath level. Traded straight back up and closed back above support. This was a trap. And here we are now. We're just trading sideways after this trap. So we're probably are going to be looking for shorts. More than likely. Because that just was a trap. But I don't like taking shorts at the low end of these ranges. And you can definitely see that wedge there. You don't even need to look at it on daily to see it. You can see it on the hourly. It's wedging up. Shit. Let's go from that. Here, let's just go to this high. Take this down here. So we are wedging up on this asset. And that was a closure above, then an instant drop back into the range. So I would probably just give this thing a day or two to get. It looks like it's playing mad games, right? So when things start to get so unclear like that, I mean, you're stretched out to the downside. You do have bullish, you know what I mean? That stuff's going on the RSI too. So people are looking at that divergence. It's just, I don't take positions on divergences, and I don't care about divergences. You know what I mean? Because it just takes a small bullish move to play that divergence out. But you are diverging, and you're making lower lows on price. So I'm expecting a bounce out here. I'm expecting a bounce out of here. You may get one more wick down to take out any of these people, and then a big bullish candle out of there. Is it holding that daily? Nope, you got a daily. That Thursday you closed below it. So there's your daily Heath level right there. There's a close below, then another close below. So price looks like it's wanting to go down and sweep these lows. If you do get a big push down to sweep those lows, you would need to see massive continuation, like a big drop and a close much lower, then a push back up into an area of resistance. You would want to see that hold, and then for price to continue lower. You're in quarterly support, right? This is what's going on. You're into quarterly support. This is quarterly support. You're not far from it. That is that swing low. So if we go back into the daily, you can see it. That's that swing low. That's quarterly support. This is why you're starting to get harder and harder to go down. It's called exhaustion risk. The pro sellers aren't putting on short positions here. That's what happened to Bitcoin, guys. It's the same exact thing. Pro sellers are not selling down here. Actually, if they're in from up here, and they're taking profits down there. So taking profits from pro sellers as well as retail buying, it becomes exhaustion risk to the upside. This isn't really much of a sign of buying. It's just more of a sign of short positions closing, right? For buying, you need continuation to the upside. You are above the RSI. If it can maintain that, this is why we are watching this level down here, right? This is why we will continue to watch for a retest of 32,816. That'll put you roughly right back around that 50 spot. As long as that level holds on a 4-hour closing basis, I will indeed probably be looking for long positions, targeting at least next area of resistance. So right now it's a no-go on the Kern, on the Bitcoin, not doing nothing. Gotta let price give us at least give us a slight bit of clue as to what it wants to do. On the Euro Aussie for the entry, when do you know to use the top or bottom of the hourly bullish candle? You watch price. It's experience, basically. There is no other way I can say it, man. It's just experience, right? There is no way to ever know if any trade is ever going to work out, because we can't see the future. But what you can see on this bullish candle, right, is if you marked out that high or that area, the open of the bullish candle, keep in mind that the top of it is resistance. That's the Heath level. But you see how this candle just barely closed beneath it? Just barely closed beneath support, beneath this bullish candle's open. That lets you know that there's a pretty good chance that price is going to be playing around inside of that bullish candle's range. So if we go into a 5-minute chart, here we are. This is what we're looking at, right? This is that hourly Heath level. 4 o'clock, 5 o'clock, 6 o'clock. Where's our 6 o'clock? Because this is when we're looking for entries. 2:10. Well, let's just go ahead and call it 9 because we already took this trade. So this is our kill zone. This is our kill box. From this time to this time is when we're looking for entries. And we know we're looking for shorts. And we know we're looking for price to test up into that open or even the close. So mark the close of the hourly candle in question, right? And then you can watch your 5-minute, come on. Then you can watch your 5-minute charts. See how small your kill box is for entries now on the hourly? That's your kill box. On the 5-minute, that thing gets wide. This is why I suggest don't watch 5-minute charts until you're ready for entries. This is the close of that 5-minute candle. Anytime in here, this is prime hunting territory. There is a 5-minute Heath level right there also, coinciding perfectly with the hourly close right there, man. It's absolutely perfect. 5-minute closure above that, you're not looking for entries. Never got it. There's a 5-minute test. Any one of these candles you could have taken entry. Stop above this swing high right there, because that's your hourly wick high. You go back into that hourly candle, you'll see a slight itty bitty wick on it. Where are we at? Slight little tiny wick. You can see that this candle did trade above it, but that happened before we were looking for entries. This was the candle to enter on. This one right there. And that's your entry. You're watching the open as well as the close on a 5-minute chart. Watching the open as well as the close on that hourly. It's fantastic. I mean, it writes itself. That's your entry. 7:45 in the morning, you know you're golden to take entries. As long as you're in between these times here and you got a higher time frame level to watch, that's your entry. That's what you're looking for as a trader. Target low of day, or in my case, I was targeting somewhere down here, right above that bearish Heath level. So it turned out to be a fantastic trade. And it didn't have to be up here, right? People are looking to try to pick exact reversals, tops and bottoms. Stop doing that. Look for intraday opportunities. From this time to this time, you're looking for an entry in this kill box. Always. Every single day. You're doing the same thing day in, day out. Keep repeating the process. And eventually you will start to see those profits. What's up, Pat? Where did mommy go? Come tell me about it. I don't know where she is. Go find her. She didn't leave because she didn't say bye. Yo, 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 what's up? Aaron C's in the house. So I hope that clears it up for you, Wes. Hello, all. Hello, Amir. How are you doing, my friend? We have analyzed Bitcoin yet? Yes, we are working on it. Also, I don't know if this pertains to any of you, but I did add a few little better custom emojis for you channel members out there. I got rid of those ones with the boxes around them. So there you go. All right, let's move on. Now, how do I close that? Oh, that's gonna screw me up. I just seen a question that I wanted to read. Bitcoin. Well, I mean, we briefly went over it. It was very brief. Like, we're still waiting for Bitcoin to test that area and hold as possible support. This area right there. If you go into a weekly chart also, you can see that Bitcoin is testing last week's open. So that's last week's open right there. There's also a weekly area of resistance there from supply, your Heath level. So you're testing this stuff right now. But I definitely would love to see Bitcoin close above 34,259 today, which is last week's open, which would confirm this as a bullish reversal. If you close below it, it still is kind of an engulfing because you did take out the low and you did take out the high. However, if you close, depending on where you close from this open, will determine the strength of the outside week or the bullish engulfing on the weekly. It is working on it right now. And you can see how it's working on it on the hourly. Hourly support is right there. And then look how beautifully that hour test came in right here. Perfectly. So, yeah, support is holding. Another hourly support will be down here, and then ultimately this one. But it's just playing around. Tomorrow will be the real move. Tonight's close will be important, and the close happens at 8. So from 7 to 8, watch and see what happens with price. We definitely want to see it close above that 34,259 area to validate that bullish reversal. And then if we do get that validation or that somewhat of a confirmation, we then know that we will be looking for longs somewhere down here or maybe even higher. Note all your 8-hour levels are below that. Where are your 4-hour levels? 4-hour levels are below that. 2-hour levels below that. Well, no, you got one there. It was tested on this push lower. So that's 2-hour support, and then you have nothing. You just have this gap of price. It's not a gap, but there's no wick tests, right? Well, no, there is. It's really close. So it's not really a gap at all, or what some people are calling a fair value gap. It's not even there. So yeah, looking for price to come down. Hope maybe test that daily. I don't see anything on the smaller time frame that I like better, right? Nothing. So that daily is still it. There it is. That level right there. Boom. I come in, test that. Everybody else will assume that the bears are back in control, but as long as you don't close a daily below that, I'm looking for bullish entries. Because this is a little bit momentous here. This is a pretty good aggregation of price back to the upside. How do I get rid of this thing, man? It's driving me crazy. Maybe if I scroll up. Screw it. Let me go up a little bit. What's going on? I see a link. Who's linking me in the chat? Afternoon, there is any setups you see for this week? I'm going to talk about some setups on FX. I haven't really looked at the FX markets today at all. I was working on getting those emojis done for the Trade Talk members as well as the Discord. It's just one thing that I've been wanting to do for a long time. And I haven't really looked at any FX charts yet. I know I'm probably going to stay away from Euro USD. CAD Yens had a pretty good bout of bullishness. Came in for a retest there, but we're watching that level. You can see it's getting ready to go up into that 50 spot as well. So it has to get up to 88,486. At that point, we'll probably be looking for some maybe shorter term downside positions. US oil is getting a bounce. So let's get rid of these tickers. You're back above the 50 on the daily. All right. There would have been there. Well, you're still below it. So that was support until you got this break. Then the very next day tested it as resistance, and then there you are. So now you're coming back in and you're testing that level again to see if it wants to hold as support. Daily Heath level is all the way up there at 74.16. So if you get up to there, then if you get a closer above that, you're not looking for shorts anymore. This thing is bullish. It's structured to the bullish side. This was just a pullback to cool off this oscillator. Went all the way down to oversold and then bounce. Testing above the 50 spot now. Leaving Euro USD alone. USD CAD, if Euro does get a strong bounce, we will be looking for shorts on dollar. All right, so dollar CAD looks like an eligible participant. It's still in bullish zone though. Massive divergence on this as well, from this high to this high. Massive divergence. That's straight up. So this thing may be getting a pullback. There's just, yeah, I mean, I'll look today and I'll find some stuff in tonight's FX Weekly Outlook. As long as my internet allows me to do so, I will absolutely throw some what we're looking for. Oh, I think he was looking for CTM's Discord. In the link of this video, there is a link to both CTM Discord and the Patreon link for my Discord. It's in the comment or in the description of this video. I'm not sure what that link is for though. John H, it's all over descriptions. Yeah, okay. Aaron's on top of it. How do you determine where you put your stop loss? Whenever I try to find those sniper entries with a tight stop loss, I always get stopped out. So now I usually have a pretty wide stop loss in case it comes. So it goes in line back with the entry, right? So as long as price is sticking to that entry that we're looking for, and it looks like it's going to give us that entry, then we're also looking for a place for our stop loss as well, right? On the bigger time frame. So we know that this was the candle that was in question for entry, right? However, we didn't get entry until this candle, so a pretty good spot for this stop loss would have been there, right? So that would have been a fantastic entry with a fantastic stop right there, 6.1 pips above that. But go to 10, right? It's easy for an asset to move 20 pips inside of a day for a daily range expansion. Even if it's choppy and range bound, an asset can get 20 pips. So you're just basically looking for entries that can give you a probable 2.2 to 1 risk reward. You're not looking for 10 to 1. You're only looking for 2 to 1. At 2 to 1, you take off profits. If it looks like it's going to give you more, then stick with the trade and see what happens. But we're looking for entries that mark these levels, these exact levels of price. So our stop is going to be roughly 10 pips away from that. But you can absolutely make it higher or wider if you want. But the wider your stop loss is, obviously the smaller your position size will be. Back to a retest level or an old high. I see now Heath on Euro Aussie. Thanks for the kill box. That's what's up. Yes, it is. Absolutely. Can you look at USD? Absolutely. This stream is for you guys, man. I'll look at whatever you want me to look at. Where are we at? There it is. So let's get rid of that watch list, as it does hurt the bit rate. We're coming into daily res right now on USD JPY. Right there. Nice strong close on the day above old resistance, which would have been this candle. And notice how this candle closed above that resistance as well. There's your daily close. Here's your entry, or close to it as possible. So let's use this one as an example for another entry. Right here, where are we at? In Blades Bar Replay, because this is beautiful. This level that's marked D will be the level in question. So there it is. That's that level. We're looking for, let's go to the hourly. It's a lot easier and quicker. 6 o'clock, Alt B. 11 o'clock, Alt. Nope, we don't want 11, we want 10. Alt V. There's a 4-hour window at which we will be looking for entries to the upside. Boom, there's your touch. That happened Asian session, non-entry. Boom, there's your London open right there. That's an entry. That's your daily level. There's your last hourly support. This is the same daily level. You can see that D right there. So this is the level that we're watching on the smaller time frame charts. There is your hourly support. Very, very close to that daily level, right? Yes, it was. 3 a.m. is your London open. That will be your low of day, more than likely. In this case, we know it was. That would have been the entry. Boom, right there. That's your entry. A support level next to that daily level. Into a smaller time frame we go. 5 minute. We're looking for New York entries. And this is sometimes what we have to deal with here in America. The trade already has happened in most cases. 5 hour or 5 minute support right here. Boom. We're closing 5 minute candles below that. We are not looking for entry. Now at this point, we'll go to an hourly and see what we got on hourly. There's your Heath level right there, or the top of that candle. So let's get rid of 5 minute support. Use this whole candle. That's the Heath level. The open of that bearish candle is going to be your Heath level. 5 minute. Let's see if we get a push down into here or here. Even here, in my opinion, would be a valid entry, simply because a wick below this wick, this wick, this wick, and this wick, and that wick stops out everybody that got long already, except for the people down here. Are we going to get an entry? No. Price is making higher highs and higher lows. Maybe if you get a test into this and it holds. Boom. Would I take that as entry? 7 o'clock? Yeah. There's 5 minutes or old resistance. Absolutely, I like that. Where would my stop be? Let's see how far away this wick is. But see how close you are to the high of day? This is going to be your high of day. This is a different day. Yes. This is 2020, 22. This is 21. So that's going to be your high of day. So no, I would not be looking for entry there. Let me see. 9 pips to the high of day. No entry. I would not be looking for an entry on this asset. Unless we got lower. Now, the entry looks better, right? Here we go. We're trading into that. That's that hourly wick low. Now let's see if we got a 20 pip target to the upside. Not yet. And that was going to probably be your entry. Oh, wait a minute. What's going on? I thought this thing went up. So yeah, that was a stop out on everybody's account. We were looking for bullish entries. So yeah, trade done, stopped out. Let's go into the hourly and see what just transpired. Oh yeah, that's that daily, all the way down there. That's what you was looking for. Came all the way into the daily beautifully, twice. I was assuming that was the only time you got a test of it. No, it came back in and got another bite. This is difficult trading right here, right? But that was the entry, that daily level. Only because we know it, because we've seen it in hindsight. But even had you entered here all day, it traded sideways. Where are we at now? You're going into the Asian Open. Now you're starting to make your push. Yeah, so yeah, difficult. So finding entries close to as possible those daily levels. Stops are going to be determined by other swings that are happening inside of this stuff. Like on that 5 minute, when I said that I would have even taken it that far. Let's go back over here. So that would have been the stop, more than likely. If I would have entered on that test, the stop would have been beneath it, like beneath the wick. And you would have been entered and stopped out inside of 5 minutes. Which happens. Absolutely it does. That's your daily level there. So it just played around that level. I would have absolutely been looking for longs on this day because of that. That test right there. Then it came down, and see how it stopped all these people out, even all the way over to here. That's flawless. Like, and there it went. So that's entries in a nutshell, guys. This is why we have to use stop losses, because we don't know what the future is going to hold. We're just looking for possible areas of support and resistance to look for those entries in that specific time zone. So you're coming into daily resistance now. You're not looking for bullish entries no more, because you're coming into resistance. Also, probably because of that level there. So even, it's still easy to get analysis paralysis using this stuff. Where's your RSI? You just got above 50 because of this close. We would have probably been looking for shorts more or less than longs. And we would have gotten stopped out on it too. That's called choppy price action. So watch the next level of resistance and see what happens when you get up there. I wouldn't take a first initial test of it as a short if you're looking for shorts. I wouldn't be, because price is showing us it definitely wants to go up there. So you can watch it on like a 4-hour closing basis. See if you get a massive rejection on a 4-hour time frame. So you're going to be testing this. See if you get a massive rejection. When I say massive, I mean you take out this low at least on a close. Boom. If you close, push up into this, and then close down here, then you can watch the open of that on the next candle. See if you get a wick up into the open of that bullish candle. And as long as you start to see failure from that, then you can look for entry short, targeting the first area of support, which would be down here, 110.312. That would be your target. That would also be a relevant spot for possible longs, looking for this near-term stuff to continue higher. But yeah, it's at a pivotal spot. Pivotal. It's at the 50. So we will keep an eye on it. That's for sure. Loving it. Really appreciate it. It's my pleasure, my friend. My pleasure. Alright, guys, if anybody has any other questions, fire them away. Basically, also, I want to say this before we close it out. If you're having difficulty seeing what you should be doing on the market for that day, for that trade, then leave it alone. You don't have to be in a trade ever. As a market participant, your job is to protect capital. So if you're constantly in trades, your capital protection, it's impossible to protect the capital once you enter the trade. You have inherently put risk on. So to preserve capital, it's best to not be in a trade. I look for those absolute perfect setups to where like I almost have no qualms about it. Like, this is the direction I think it's going to go. This is the trade that I like. This is the one I'm entering. If it's unclear, then I leave it alone. I wait. I give it a few more days to give me some more data. Because one trade, if it's like a 5% win, you just made 1% per day on average, you had a fantastic week on one entry. And that's the initial goal, is to make sure that you get that money, make it, and keep it. How's that Wyckoff pattern playing out? We looked about a month ago on BTC just out of curiosity. Well, I don't know if I can find it. Let me see if I go into, what would that be? Notifications? I guess this is it. I'd have to scroll way down because I get, people just automatically put my name in their tweets, so I get all these things and I don't even know what's going on most of the time. I don't have a link to that actual chart. or the overlay. So I don't have it handy. But yeah, you're right. I haven't seen it in a while. Because they were looking for it to be bullish. It just was not bullish. There's something like it. Man, I do not like that new trading view symbol. Well, it won't even load up. Oh, that's because it took me straight there. Nah. That's not even it. I don't know where it is, Aaron. Well, I'll find it later and we'll check it out. Yeah, it didn't work. I know that for a fact. It did not work out. Because they were looking on it on an 8-hour. And it was this section here. So that's when it failed. Right? They were looking for some zigzaggy stuff and then starting to make higher highs and higher lows from this right here. And then boom, gone. Yeah, it didn't work. It did not work out at all. It's maybe starting to work out now though. I don't know. We will see. I do like this price action coming out of there. It's too parabolic to put a trend line on it, guys. So try not. Please don't be looking to take entries on something like this. Right? I mean, can it hold? Absolutely. But it's extremely parabolic. Came into that support right there and held, so maybe it does go from there. But that's too parabolic. I'm waiting for a test down to here. Then we can see some price action. That would be a beautiful entry. Boom. Yeah, it was an inevitable. It was going to fail. Yes, it's simply because you can't find... let's go over here and hit Wyckoff. Accumulation. I mean, if you're simply just finding images on the Googlenator and then deciding like this is what's going to happen, I think this is the one they overlay. Here it is, right there. That's it, right there. It doesn't show me what time it failed, but yeah, that's it. That's that overlay. And it didn't work. They were early. I mean, there's plenty of stuff to check out, but in my opinion, see, here's a good one. This is what people need to watch, right? Stuff like this. There's the high, there's the retest, there's the entry. That's what we're looking for on Bitcoin now, right? Not quite a high though. That's a daily level, so maybe the absolute high of that candle holds. It's possible. So a pull back into this area or this area. This is where we're looking for higher low support, and then Bitcoin to roll up and go up higher. Because people are going to look at this steep trend line and be like, oh, it failed, it's bearish. It is bearish still. I mean, you're in a downtrend, so that is going to be where I'm watching it. 32,816, 33,187. Time to sleep. Thanks for sharing. No problem, guys. I'm going to go ahead and wrap it up myself. Thank you all for being here. As your time is so precious, I really appreciate you guys showing up. Hopefully I was able to teach you something about entries. I don't want to put that stuff out on regular YouTube. Not yet anyways. Because that stuff's closely guarded to my heart. And also, if I start doing that, then I'm going to get bombarded with questions. So I want a little bit more time. Also, maybe I can figure out a way to put it together better and just put it in like a tutorial video of what to look for and what not. So you guys have a fantastic day. We are going to look at the FX Weekly Outlook later on this afternoon. I will see you guys there. Make sure you trade safe, trade smart, and happy trading.